Hello traders, you're welcome to this video. In this video, we are going to be discussing one of the best breakout trading strategy. So if you are a fan of breakout trading, then you might want to watch this video till the end because we're going to be looking at some key concepts and other useful information that can serve as you know additional guide to what you already know about breakout trading. Okay, now as we all know, breakout trading is one of the most effective ways to to catch price moves because breakout usually happens after a period of consolidation or a period of ranging. So whenever a breakout happens, chances are that price, so long as it is not a false breakout, yes, chances are that price will move significantly. At least it will move enough for you to make a substantial amount of money, depending on the time frame that the breakout occurred in. Okay, so breakout trading is one of the ways that traders use to catch good moves in the market. Okay, because when markets consolidate, they often build up momentum, and then once price breaks through a key level, it tends to result in a significant move. Okay, so now let's look at how to understand the key concepts behind breakout trading. Breakout trading involves identifying areas where the price has been confined to a range. So we're just going to do that now. We're going to look for such areas where price was confined to a range. We can see such area around here. Yeah, we see for this period of time, just within this period, price was confined within this range. Price was confined within this range. You can see that. So you have to draw a resistance and support level, and once you draw the resistance and support level, you should have price bouncing off these levels. Then you know that a consolidation has been located. Okay, now top traders usually anticipate the breakout of price either away from the resistance or away from the support. Okay, so now how do you spot potential breakout zones? There are several ways to spot potential breakout zones. It includes chart patterns. You might want to look for patterns like ascending or descending triangle, flags, wedges, and the rest of them. These patterns represent a buildup of pressure that often results in a breakout. For example, now when we finally had a breakout here, um, there was no specific kind of chart pattern, but one of the things that can suggest to you that the breakout is valid is the momentum at which the breakout occurred. You can see that the pressure, the bearish pressure was strong after this breakout occurred. Usually after a breakout, the pressure in the direction of that breakout is usually strong. Now, secondly, in a range-bound market, when the price trades within a well-defined range, either between horizontal support or resistance or trend lines, breakouts from this range can trigger strong moves, just like how we have here. So even if you don't exactly see a chart pattern, when you notice a strong move after a breakout, it could show the validity of that breakout. For example, we can see that there was another range here and a breakout occurred. Can you see? It's something that happens. There was a breakout. Can you see the energy that the bullish move used to go above this breakout? You can see that there was a resistance zone here. Another thing is the increase in volume. So let's just add on the volumes indicator. When you're trading breakouts, you might want to be checking volume. You can see that after the breakout occurred, there was an increase in volume. Can you see? An increase in volume is also one of the things that we use to identify a valid breakout. You can see there was an increase in volume also at this point. Okay. All right. Now, sometimes also some traders like using moving averages to also confirm breakouts. For example, when price crosses above or below key levels, like maybe the 50-day moving average or 200-day moving average. But even if you don't want to add on moving averages, you can just work with your support and resistance levels, trend lines, and then volume indicator. But you can also add MAs for additional confirmation. Okay. Now, when it comes to managing risk, it's very, very crucial for breakout trading because false breakouts happen. Okay, false breakouts happens. Okay, so how do you manage your risk? Place your stop loss just below the breakout level for long trades or above the breakout level for short trades. So now in this situation where we had bullish breakout, we can place our stop loss just below the breakout to avoid false breakouts. So you want to place your stop loss tight. You want to have a tight stop loss because if it happens to be a false breakout, let it be that you will not lose much. Okay, so you place your stop loss just right below the breakout level. Then as for this one, this is a sell breakout. You can place your stop loss just right above the breakout level. Okay, then one of the things that you can also use to manage risk, just to ensure that the breakout is probably valid, is entering on retest. So instead of entering the trade on the initial breakout, you might want to wait for the price to retest the broken support or resistance level. If it holds, this confirms the breakout and you can enter with less risk. It's just that in some cases, you might not really see a very notable retest. Yeah, the retest could be very quick. The retest could be, more elaborate. So what you just need to do is wait for any slightest possible retest. For example, in this case, you can see that there was actually a retest because the you will see that the lower wick of this candle actually touched this support because after this resistance was broken, it turned into a support, and we can see there was a retest before it started going back up. So in this situation, after the retest, you will have entered the buy trade. Then as for this sell, you can see that after the thing broke out on the 1 hour time frame, we can see that there was no exactly notable retest. But let us see if we'll find a retest on the smaller time frame, because sometimes it's possible that the retest might actually happen on a smaller time frame, and then we can use that to enter our trade. Where is that line again? Uh, I was just trying to show an example. Okay, hope I don't get out of my site again. Sorry, I'm just trying to look for that period, the area where I set that vertical line just to identify. Well, it seems to be going out of my sight. So basically, what I was just trying to explain was that on a smaller time frame, you could possibly see a retest. So after you identify your breakout, if you don't see a notable retest on that time frame where the breakout occurred, you can actually check lower time frames to know if you will see a retest. Okay, after that, then you enter your trade. Then in terms of position sizing, try to manage your risk by try not to risk maybe more than 1 to 2% of your capital on any single trade. You might want to limit your risk to 1 to 2% of your capital. Use proper position sizing to stay within your risk limits. Okay, so let's say you are looking at a currency pair, you're looking at a forex pair forming a triangle pattern, for example, and then price begins to tighten in the apex of the triangle. Now, this one is maybe you are having a triangular pattern. It is something like this, because breakouts can also happen from dynamic support and resistance levels. And we can see now there was a breakout from here. So now you're having a wedge pattern. This one now is okay. This is a triangle, right? Is a symmetrical triangle. So now in this triangle pattern, you are having price. It's beginning to narrow. It's beginning to narrow towards the edge, and then suddenly you you notice that price has broken out. This was a false breakout initially. You see the reason why if you enter a trade after a breakout, you should set a tight stop loss, or you should wait for a retest. So in this case now, the breakout finally happened, and then we had price rally down all the way up to this point. So when this breakout happened, we could have waited for a retest, but now the retest was not exactly obvious on this time frame, just like I pointed out. You might not exactly see the retest on the time frame that the breakout occurred on. If you don't see the retest there, you can decide to check lower time frames just in case of if you will find a retest there. But if you don't, then if the volume is strong, the volume of that breakout, then you can go ahead and enter your trade, but try to set a tight stop loss. Okay, it's very important. So by following this strategy, you can actually improve your ability to catch strong price movements and limit your downside risk when trading breakouts. So some final tips: always confirm breakouts with volume to avoid false breakouts. Okay, the volume indicator really helps. When you have an increased volume, it kind of adds to the confirmation of that breakout. And be patient and wait for clear setups to reduce the chance of fake outs. Fake outs are false breakouts. Okay, regularly analyze multiple time frames to see the bigger picture of the market. Okay, because with proper risk management and practice, breakout trading can be a very nice tool to capitalize on market momentum. I hope you found this video insightful. Kindly like and subscribe for more trading insights. Cheers and happy trading.